What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about Carvana. Is this the beginning of the end? So on this channel, we've made multiple videos talking about why I believe that Carvana is doomed to fail. From the way their corporate structure is, the way they buy, sell, fix cars, the way they actually do financing, even down to the way that they decided to leverage themselves and try to buy adesa from car to kind of kick that financial can down the road with somehow their income from adesa be able to get them out of their financial deficit. Now, the reason why I'm making this video today is that last time I did that video on Carvana, which I'll link somewhere up here, I got multiple calls from news companies, local and national, and they wanted to know my opinion on it, and we just talked about it on the news. But this time around, over the weekend, I got a bunch of calls from financial institutions. And a lot of them want to know what is a way a dealership basically is a proper way to buy and sell cars, to do financing, how they do their debt structure, some of the things that Carvana is doing good, some of the things they're doing wrong. So after multiple calls of doing this, I got a very eerie feeling about what they wanted to talk about and what they were focusing on. They're really going on the doom and gloom, like they know that they're not making any money. Carvana is basically going to be going down further and further. If you guys have watched the stock, I think it was at like $57 by the time I'm making this video. So it keeps going down and down. I believe that there's a lot of financial institutions that are going to be doing major shorts on the Carvana stock, which is just going to kind of breed more insecurity in the market. Now, I'm going to go over some of the things that I believe in what's happening and why Carvana is doomed to fail when it comes to a financial standpoint. So if you look on the screen now, you can see that Carvana stock is trading for $60.47. But if you go back just 6 months ago, it was trading for a little over $300. $301.41. So what happened in this 6 months? Why did their stock go from $300 all the way down to $60? I believe it's because they're showing their true colors. They're not profitable. This whole thing of, oh, we're just going to keep kicking the can down the road is finally catching up to them. So if you look at the screen, you're going to see an orange arrow right above 2020. That's when the stock of Carvana took a dip because of the pandemic. But as you can see, right after that, it started having this massive incline. A lot of that was due to stimulus money, to the PPP loans, everybody basically pumping the stock of Carvana, everybody drinking the Kool-Aid. Now, if you look right above there, you're gonna see two different little blue arrows. Now, in that vector, in that section in between, that's when the actual CEO, Ernie Garcia, was selling off massive chunks of stock during the rise. Now, not to be one of those people with tinfoil hats, but if you believe in your company, why would you be selling on the way up? You know, you should probably, keep that money in your company, just grow the stock, build the company. But during this whole time, they liquidated massive amounts of time. Now, I don't know the exact dollar amounts, but I know they were very massive. A lot of the financial institutions that I was talking to were talking about dates, times, and dollar amounts. And I know we're talking of millions upon millions of dollars that he was liquidating out of the stock. Now, you can see right before it ends, it's right around the $320 marker, and then it hits the peak of whatever, the 350, 360 something, and then it just pretty much goes all the way down from there. So after seeing the sell-off and watching how month after month and quarter after quarter, Carvana is not profitable, Moodys actually did a financial review and downgraded their credit rating, which I'll list right here. So one of the things that sticks out the most to me in this particular report is the downgrade reflects Carvana's very weak credit matrix, the persistent lack of profitability and negative free cash flow generation, which we expect to continue through the company's build out. So basically they're expecting them to not be profitable for even longer than what Carvana originally said, which basically started bringing down that credit rating. So with Carvana's plummeting stock prices and the lack of confidence in their actual matrix, how is Carvana going to make money? Because as of right now, they're not profitable. I think they're on pace to lose another $150 million per quarter. So now they figured, we're going to put out $3.3 billion in junk bonds. They're basically selling off their debt. They're offering people, I guess the first initial offering was April 27th, they issued $3.3 billion in junk bonds at a 6.25%. This floated out there and not a single person took it. Nobody wanted it. So they restructured the junk bonds and said, you know what? will give you a 10%, 10.25% return on your junk bonds. Once again, nobody took it. Everybody saw it as too much risk. I think the writing is on the wall. People are talking about it. They realize that Carvana is not as great as what they were talking about, that they're losing money month after month, and basically buying Adesa from Car and everything else was just kicking the can further down the road to show a little bit more profitability on your balance sheet. Well, now they decided to restructure it and put it up for $1.5 billion junk bonds, and it was purchased by Apollo. Now, I don't know if this is true, but some of the reports that I read and some of the financial institutions that told me was that Ernie Garcia II, the senior, the father, has a role in Apollo. So basically they purchased their own debt from themselves. Now, you may be thinking, well, why would you want to purchase $1.5 billion worth of debt from one company and put it into your other one? Well, I guess the way the option reads is that if they were to purchase this, they have a certain guarantee through bankruptcy. And if they were to guarantee this through bankruptcy, for every $100, they're issued 10 coupons. I'll be honest with you, I don't know how junk bonds work. I'm just reading from the actual paperwork that I received. When they're paying off, they're supposed to pay whatever, the $100 plus the 10 coupons. But if the company were to go bankrupt, they would get not only their $100 of the original investment back, but they would get another additional 100 coupons on top of that per 100. So it basically means that their 1.5 billion is now $3.5 billion. So even if Carvana would to basically collapse and fall apart, the money they got from the Apollo group would pay for the Adesa purchase. Now, the reason why this is such a big deal is that if they were to go to bankruptcy, Apollo could basically take Adesa as payment for this actual deal. And that's a big thing. I don't know how this is even going through. I don't know if you guys have read some of the reports on Ernie Garcia Sr. I'm not going to disclose anything. You guys can look it up online. So unfortunately, I am not a junk bond expert. I only know a little bit from what I'm reading here, so I apologize if it didn't come out clearly or if I'm not using the correct terminologies. If you guys know more about it, I would love to hear it in the comment section below. So please put your comment down below. And also, all the articles that I've been getting my information from are going to be linked in the description below. So this way you guys can take a look at it and see. Now, one article that really stood out to me is as I was on the phone with some of these financial institutions and we were explaining how Carvana was losing money with every single sale, with every purchase from the general public, and they were trying to basically borrow more and more money from the general public just to keep their business alive. And then the last, ditched effort to kick the can down the road was purchasing Adesa. And so they're like, well, would you call it a Ponzi scheme? And I was like, almost. It's, robbing Peter to pay Paul. And so one of the financial institutions told me I should look up this article, and they sent me the link. And this guy is spot on. I'm telling you, when I read this gentleman's article, I laughed so hard because it is so true. Some of the stuff we talked about behind closed doors and some of the things I've talked to other automotive journalists as well as other people in the automotive industry didn't really believe me, and I can't believe I never seen this guy's blog. So I'm going to link this one in the description below and I'm going to put it up right here. So the name of this article is Carvana, a Ponzi scheme collapsing, which is truly hilarious. I love it. So we're going to go ahead and start off with the summary, which he puts out that Carvana is controlled by a felon with 25 years plus experience of running similar cons. Ernie Garcia II is the smartest guy in the room. Now, I have to concur with him. I've talked to multiple people in the automotive industry as well as the finance industry, and they all said that Mr. Garcia is extremely clever and financially savvy when it comes to this thing. Now, if you remember at the beginning of the video, we talked about how Ernie Garcia II was selling off chunks of his stock as, it basically got the pandemic pump and rode all the way up. But then we talked about recently that he has a small hand in Apollo where they gave $1.5 billion to Carvana to kick that debt down the road. And so he's buying back in with also guaranteeing his leverage. If they were to go to bankruptcy, they would at least get Adesa out of the deal. So I honestly believe that anything that this guy does is well calculated. Now, this could be all, tinfoil hat speculation, but I'm just giving you my opinion. So a Ponzi scheme always ends the same way for the same reasons. The Carvana Ponzi begins the final countdown on November 4th, 2021 upon announcing Q3's 21 results. Now, my video that I made literally corresponded with this exact same thing. We're showing them how they were going into debt with every car sale purchase. They weren't making any money. There was no light at the end of the tunnel. We were saying that the jaws of debt were going to collapse on them, and their lastest effort was to purchase a car or purchase adesa from car. So the article goes on to say that Carvana is structured unprofitable, which we talked about before, and that is structured so this way its subsidiaries can receive all the benefits of what's happening. Now, we talked about how Ernie Garcia II and the third own multiple businesses and they're all interlinked. So I'm gonna go ahead and put up a picture of the screen right now here. So here is the Carvana Ponzi scheme summary, which is pretty hilarious. Now, Ugly Duckling was the very first incarnation of this business plan. Now, if you guys don't know about Ugly Duckling, definitely do your research. It's pretty hilarious in the car business. We talk about all the time. They were the first kind of nationwide company that was doing like a buy here, pay here type of business where they're charging extremely high interest rates for really shitty cars and just juicing customers. But they had a bunch of lending law violations, fraud, all kinds of crazy stuff. I won't get into that because that's just basically sets up for the rest of this stuff. Now we're going to talk about something that's maybe a little bit more relevant, which is onto drive time. Now, in my very first video, a lot of you guys knew that Ernie Garcia, the father, owned Drive Time. He owned Drive Time and he also owns Bridgecrest. Bridgecrest is the actual financial institution that gets a lot of the loans from a lot of these other little dealerships. So Drive Time, basically same thing, just another Ugly Duckling, but in a much more upscale version, and they're selling off their loans to Bridgecrest. Now we bring in Carvana into the fold. You go to the next folder and it shows everything. Carvana loses money on every single sale. The Drive Time is the main company. Bridgecrest gets some loans from Carvana, but also Carvana sends a lot of their loans over to another company, I think it's Spinola Cash, another one that Ernie Garcia II is a part of. And even if they were to send, I think it was estimated about $1.5 billion in automotive loans, even if they were to generate, let's say those loans are at 7 to 10%, if they were going to get that, they would make tons of money, and that's a separate company. So even if they file bankruptcy on Carvana, I believe that Ernie II and Ernie Garcia II and Ernie Garcia III will probably still profit from that. So what is the true purpose of Carvana? If they're making so much money with Drive Time, which is the mother company, which owns Bridgecrest, which owns Carvana and everything else, and it's all funneling money back and forth, why do they need Carvana? Carvana was the fun, sexy, wannabe tech company that can get them public to get that public money to grow something this big, this quickly. Now, I'm going to leave you with this. One of the big things the financial institutions ask me about is how come Carvana can't be successful even with, let's say, another $1 billion, or if they do a third initial offering of junk bonds and bail themselves out of debt. There's only a handful of things that can really explain it. One, the automotive industry and the automotive businesses and dealerships and franchises are structured around talented individuals. A lot of you guys are going to agree with this. Some of you guys are going to disagree with this, but this is okay. If you're a dealer, so you're only successful as your best finance guy, as well as your best sales guy, and also your best service department guy. Those things, talented individuals, is what makes the dealership go around and around. Those people, unfortunately, are in extremely high demand, and there's not very many of them around. So that's why if you look at major corporations like Sonic Auto Group, AutoNation, they grow at a rapid rate, but nothing like Carvana and everything else because they just can't scale up to that model. Well, Carvana said, well, we're going to take all the smart people out, the ones that know how to buy cars, the ones that know how to sell cars, the ones that know how to do the proper financing to make sure we don't receive long-term debt, are not in the building. They're going to just make everything animated. So now they have Bridgecrest and other banks that are buying all their loans. They're buying every single car in town just to eat up market share and raise the price of cars. They're just moving money back and forth, hoping that as long as the money keeps moving in the bank, somebody will give them money to invest so they can kick that can further down the road. And that's why I believe that they're gonna fail. Now, I'd love to hear your opinions and comments about this. I know this video is a little bit longer and is a little bit more ranty, but like I said, the things that I'm seeing and the things that I'm hearing are not very good for Carvana. I believe that now that they're being investigated by their creditors, it's only a matter of time before investors start asking, hey, what's going on with stuff in the back end? you know, why aren't you profitable? And especially when they bring out next quarter's numbers and they're showing another losing month going further into debt and they can't even already service their prior debt obligations, it's just going to get uglier and uglier for Carvana. The only thing they can do is hopefully find people that are stupid enough, you know, the bigger fool theory, to keep buying these stocks to hype it up. So I'm not much of a stock guy. I don't like this. A lot of my friends are financial YouTubers, but I always make jokes when cars, it's a very simple business as long as you know it. And when I saw this, you know, I made jokes about it. We made a few videos on it and people are very skeptical. Oh no, they're smart. They figured it out, blah, blah, blah. No, they didn't. And this is proof of actually what's going wrong and what's going down. So anyways, I would be careful with your money. Would I invest in Carvana? Probably not. But hey, I don't know finances, so I'm not a stock trader, so do not take my financial advice. But my advice from a business aspect end, if you're going to run your dealership, don't do it the way Carvana is. We'll see you next time.